Accounting 301, problem number 6 by Ahmed Yusuf. Problem. Touche Manufacturing is considering a rearrangement of its manufacturing operations. A consultant estimates that the rearrangement should result in after-tax cash savings of $6,000 the first year, $10,000 for the next 2 years, and $12,000 for the next 2 years. Interest is at 9%. Assume cash flows occur at the end of the year. Calculate the total present value of the cash flows. Analyzing the problem. What do we know so far? We know the interest rate is 9%. We know the amount in the 5 years are not all the same. Since the amount in all 5 years are not the same, we know this is a single cash flow problem. And we know n is going to be different for each of the following years. This is the equation we're going to be using to solve the single sum cash flow problem. $6,000 was the first year times the present value of $1 amount. $10,000 plus $10,000 times present value of $1 amount plus $10,000 times present value of $1 amount plus $12,000 times present value of $1 amount plus $12,000 times present value of $1 amount equals present value of single sum cash flow. To figure out the present value of $1 amount for each of the following years, we have to know what number it is. The first year was 1, so n is going to be 1. Second year was 2, so n is going to be 2. Third year was 3, so n is going to be 3. Fourth year was the 4th, so n is going to be 4. And the fifth year was the 5th, so n is going to be 5. It goes in sequential order. That's why it goes n equals 1, 2, 3, 4, 5, and does not skip any numbers. This is the table we're going to be using to figure out the present value. This is where I equals 9%, and the numbers go through 1, 2, 3, 4, 5, and 6. Solving for the single sum cash flow, we have to do the first year, which is $6,000 times the present value of $1, where n equals 1 and I equals 9. We have to add that to the second year, which is $10,000 times the present value amount, which n equals 2, I equals 9. Plus the third year, where it's $10,000 times the present value of $1 amount when n equals 3, I equals 9. Plus the fourth year, where $12,000 times the present value of $1 amount where n equals 4, I equals 9. Plus the fifth year, where the amount is $12,000 times the present value of $1 amount where n equals 5, I equals 9. And that's going to equal what? To make it simple, it will be 5,504.58 plus 8,416.80 plus 7,721.80 plus 8,501.16 plus 7,799.16 equals $37,943.60. That is going to be the present value for this problem.